on Thursday, I did a session on reading price action based on the types of candles. Now, this week, I'm going to do a short recap of the types of candles because it's only going to take a little while and it's going to be wild and it's going to be really helpful to put everything in context. I don't know if Michael is here. Let me just double check. Michael's not here. Perfect. So, and you guys weren't here because it was Michael and Pico and JD. Now, candlesticks are the summary of transactions that happen within a certain period of time, and they have a body and they have two wicks or two shadows, and those wicks show that price was rejected at the top or at the bottom depending on where they are, but the body of the candle is the long-term price action. So the body of the candle is the open and the close. So we have them in red and green, and there are traders that change the colors because they don't want to be psychologically influenced, and you can do that on trading. You can change the colors. The red and the green depend on the result of those transactions because they're the summary. So if the buyers won those transactions, there were more buyers than sellers, it's going to be green. If there were the other way around, it's going to be red. But if whatever type of trader you are, whether you're a scalper or a swing trader or a pattern trader, you need to know how the swings go, because the market doesn't go in a straight line up or in a straight line down. It goes in swings. And I'm going to use the XRP chart. We can use any chart. I just started using this. So I'll show you the swings. Here's one swing up. There's one swing down. Here's one swing up. There's one swing down. Now, I'm pretty sure you know this. In these swings, there are smaller swings. So as a trader, you need to know if the smaller swings follow the 1, 2, 3, 4, 5 pattern. So you need to know where is my, let me put the, where is it? My patterns. Just give me a second. I can't find I'll use the path because that's okay as well. So this is 1 up to here, which is the highest point, 2, the retrace, 3, and then 4, and then 5. So 3 steps up. And then on the way down, we have the same story. So we have 1, we have a retrace, then we have 3. Now this is where it might get a little bit deceiving, and you might say this is 5. But here you would need to layer other indicators, which is what I advise everybody to do. Have at least 3 indicators to show you where the swings are. Because in fact, this is like this, but there's still 3 steps down. Now, what I'm going to show you today is how the nature of the candles can signal these turns, which are essential. Now, we don't only use the nature of the candles to make trading decisions, as in when to enter and when to exit, but we use the nature of the candles to monitor a trade. I always use that. So, for instance, if I take, let me take this path from here. In this 1, 2, 3, 4, 5, there are smaller swings that turned at one point. So where's my pen? I feel they've changed everything here. So here is where there was this candle, which is a hammer candle, that turned this from up to down to up again. Then we have another such candle here. The swing went down and this candle turned it up again. Then the swing came down from that up. Then we had this candle that turned it up again. So you see, and also if I go back, we had this candle that turned it down. We had this candle here that turned it down. And I'm on the 5 minute for some crazy reason. Let me go back to the 15 because it's a more accessible timeline. Okay. That's why I was seeing so many swings. Perfect. We still have the same candle. So this candle turned it slightly down. The other candle turned it up. This candle here was the retrace, and it switched it turned it down slightly and then up. But it showed a little like it showed that the swing up was slowing down, and then it showed that it went up. I'll tell you in a second why it happened the way it happened. This candle here, on the other hand, which is a doji or almost a hammer, even though it's green and it's long, it turned it down. It's a rejection of the price. And the bigger downswing started. So today I'll show you how, I know it looks a little bit fiddly, and it is very fiddly now because of all the sideways, but I'll show you how the nature of what a candle looks like can do to the swing, to these up and down movements, which is what we actually trade. And if you're trading, for example, let's say you're trading this wedge as a pattern, or this, it's not a wedge, it's actually a channel. I thought it was more abrupt. So let's say you're trading this, it is a wedge slightly. If let's say you're trading this wedge, you want to know when to exit and when to enter, because these trades are actually quite significant in size. So this is a 3.4%, which is 34%. This one again from here, it's only 20%, but still together they're 50%. So knowing the nature of the candle and the 3 steps up and the 3 steps down, this is gorgeous. This is 4.4 and this is 30%. Anything in and around 30% is happy days for a trader. Imagine having a 20, 30, 40% gain daily, because these are daily trades. So this one is April, same day, a couple of hours. In a couple of hours, if you're sitting down and trading 15-minute channels, you can make 100% in a couple of days, because these are couple of hours trades. So let's start with the basics. This is just a general introduction to show you why we need to understand the swings, because they're the ones that give us profit, and they're the ones that follow the up and down in the market. That's how the market moves, in ups and downs. Now we have 4 types of candles. I know you see only 2, the reds and the greens. That's not what matters here. It doesn't matter what color they have. What matters is where the high and where the low are, including the wick. So we're not just taking the body into consideration, we're taking the whole wick into account. So we have the most important ones are the down bars and the up bars, or let's start positively, the up bar and the down bar. The up bar has a higher low and a higher high. The down bar is the opposite, a lower high and a lower low. Now, the way we establish whether a candle is a down bar or an up bar is by relation to the previous candle. So these candles here were all lower from here to here, lower high, lower low, lower high, lower low, lower high, lower low. So these were all down bars with relation to each other. Here, this green candle, but it might have been red, doesn't really matter. Well, it can't have been red because it's higher and lower, but the color doesn't matter. You need to, reframe your definition of a candle in this case. It's just the box that is the body and the two wicks. That's what you need to be looking at right now. This one has a higher high and a higher low. This one starts an upswing. When I was trading these channels, I was looking for candles that have this to confirm the upswing. That's rule number one of candlesticks. An up bar starts an upswing. Rule number two is the other way around, a down bar. So a lower high and a lower low here starts a downswing. So here we have this down bar that confirms the start of the downswing. It tells me that the upswing has finished and the downswing is about to start. Now, of course, you can't trade them blindly, because if I didn't have my pattern, if I didn't have my support and resistance and even though they're diagonals, they're the lines of the channel that act as support and resistance. So if I didn't have those two, I wouldn't be able to tell that a swing is about to change. So this is just for me to monitor the progression of the swings in the space that I have. And these are the first two rules. An up bar starts an upswing, ends a downswing. A down bar starts a downswing, ends an upswing. This is 50% of the knowledge that I want you to have today from the session. Do you guys have any questions so far? No, you can ask me anytime. So remember, anytime. But I just want to stage this step by step to be clear, because it's really fiddly. The second type of questions. Yes.
I missed the first 15 minutes. Was there anything that you uncovered in the previous?
No, Michael. I saw that you weren't there, and I said it was just an introduction. I was just showing them why we're doing this. It was an introduction why knowing the nature of the candlesticks is relevant to how we're trading swings. No. And conversation about the weather. You're very welcome. Okay. Now, these two, the up bars and the down bars, are the number one candles that we need to be on the lookout for when we're monitoring a trade. They need to hit our support and resistance line. They need to do that, because if they don't, then we don't have the context of those changes. So we would take, for instance, this one as we would take this one as a down bar, which it is. We would say it starts a swing, but it hasn't actually hit the support and resistance line, which is in this case, it's just the resistance line. So here we know that this will start a small swing, but it's only 1, 2, 3, 4, 5 on the way up. So this is just the retrace for the second leg up. So we need to be mindful of not being misled, because in this sideways transition stage, there are more of those. There are more sideways, ups and downs, small swings in the bigger swings. So you need to have your support and resistance, you need to have your channels, you need to have your triangles, you need to have your arcs set up. And I'm using a basic channel tonight because I want to keep the explanation simple. But you always need to have the support and resistance to know what the candle hits. So that's the first two ones and the first two rules. Then we have the outside and the inside candles. Point 2 of our training today. Outside and inside candles don't change the nature of the swings. Inside candles are they're harmless. We see them, for instance, this green candle. This green candle would scare us. We would look at it and say, oh, look at this green candle. We're going up now. We're going up now. And we're right to be scared because the body is quite big compared to this one. The body is quite big compared to this one. So the body is like the box, not the lines up and down, not the wicks. But and it is significant that the body is bigger. It means that here the bears, the sellers, are losing their strength, and the buyers are getting stronger. So this is a red flag for us. However, for the purpose of the swing, this is an inside candle with a lower high and a higher low with relation to the previous one. So this candle, inside candles, do not affect the direction of the swing. Inside candles in a downswing continue the downswing. In an upswing, they continue the upswing. And I'll find an inside candle in an upswing as well. Let me see. There it is. This is the down. Here. This baby candle in there, tiny one, but quite relevant. And again, this candle here, it has a lower high and a higher low. It's inside the previous one. That's why they're called inside candles or inside bars, because it's inside the previous one, and it continues the swing upwards. This one as well, even though it's red, and we see this one and we go, oh my god, it's red, we're gonna come down. Again, red and green, it's good. I try to change the color of my candle psychologically, but then all the videos, all the charts that I use have the same two colors. But if it works for you, you can change the colors. I've tried it myself, but you know, to remove that emotional factor. Maybe it works for you. It's good to pass on the advice. But yeah, we might see this red one and say, oh, we're going down, look, we're turning red. Yes, true, we're turning red, but it's an inside candle. It continues the upswing. This downside candle signals, oh, we need to be careful. This downside candle also says, oh, we need to be careful again. Look, two downside candles. We're continuing the downswing quite strongly. However, we know that there are 3 steps up. We have to be mindful of that. Where is the Elliott? Like they've changed definitely something here. Here we had 1, 2, 3, 4, 5. And if we put the RSI, I'm pretty sure we would have seen that in the RSI. There it is. Wow, look how deceiving this RSI was. The stochastic topped out, but the regular one didn't. But you see the stages in the RSI. Even in the RSI, we had 3 levels. So we had level 1, level 2, and level 3. That's why it's so tricky to trade these days, because they're so small in percentage, but also in how the candles overlap. Anyways, so here we are. There we go. So here we are seeing the inside candles, how they're not changing the direction of the swing, and so are the outside candles. So outside candles have a higher high and a lower low. So they go outside the previous candle. But And again, here you would say, for instance, this green candle, where is it? I put it on the red one, but I should have put it on the green one. They're both outside candles. So this little green candle, chunky one, and you see it again. Whoever has read classical pattern, candlestick patterns, they would say, oh, this is an engulfing green one, it's a bullish sign, we're going up. No, this is just a 1-2 on the way up. That's what this is about. This is the lift up before the 3-4 drop. So because if you know your candle types, this is a down candle, starts the downswing. This is a down candle, continues the downswing. Again, down candle, continues the downswing. Outside candle, you would be scared because it's got a higher high. True, but a higher high, no, sorry. My bad. I thought I could see a lower low. I take it back. This is scary because it's an upside candle. Um, there we go. This is an outside candle, the way I put it there in the document. It has a higher high, so it started up really high up, and then it finished with a lower low. So this outside candle in this downswing continues it. What you need to go through psychologically when you are trading a channel is this 1, 2, and hold your nerve for 3. We need to go into the 5 for this one. 4, and then 5 is not here. 5 is in this big candle. There we go. If I go into the 5, I will see it. That's the trick with trading 15 minutes. You need to go into, oh, look at that. This is a nasty one to trade. 1, 2 is here. 3 is up here. No, 4 is up here and 5 is here. There we go. Perfect. If you're trading the 15 minutes, you need to 1, 2, 3, 4, because it started up here. That's why the wick is so thin and so long, and 5 here. So you still have the 3 steps down. It's only that it's so deceiving because it went down so fast. So you would be a little bit mindful on the 15 minute when you see that up candle here, thinking, oh, we're gonna go up, but it is the 1-2 on the way down. There's always a little push up before it starts coming down, and it's a lower high than the previous peak, because that's the 1-2. That's the definition of the 1-2 steps. So the outside candles and the inside candles do not change the direction of the swing. So these are rules 3 and 4. Rule 3, inside bars do not affect the direction of the current swing because they don't break the previous high and they don't break the previous low. They stay within the same price range. And 4, outside bars in an upswing continue the upswing. Outside bars in a downswing continue the downswing. So you need to know where that outside bar is in. But they're the same. It's the same rule. It's just worded differently for the purpose of being very explicit, very specific. So this is the general presentation of the 4 types, and I would advise you to spend half an hour just looking at them, doing the next 2 things. The first one is map out your trend line, map out the support and resistance, even if it is a sideways, even if it is, for instance, this. Of course, as you can see here, the price variation was minimal in the 15-minute range, but please go into the 5-minute, not to trade it or not to, but just to see, even on the 5 minute, the 1, 2, 3, 4, 5. Then the 1, 2, this one, you see, this one is to the point lower than this. 1, 2, 3, 4, 5. So even on the 5 minute, you will see the 3 steps up within your price range. And the trend line is established at 2 touch points and generally 2 breakthroughs. That's how I have my trend lines. If you ask me, where's your trend line, where's your support and resistance, I need to have 2 touches to the limit and then minimum 2 spike throughs. So this one has it here, 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 4 spike throughs, and it has 3 touch points. So it's a solid line, and you can tell quite early on that it is a stable one, solid. So you can see how these swings move up and down, and then have a look at the start of the downswings and the start of the upswings, because this is part of the practice. Again, I want you to see it when I do it, but then it's great for you to do it yourselves. So let's find a candle that starts an upswing. This one. Starts the upswing. If you're a scalper, this is gold, because you're gonna have, let's say you go in and you wait for this to finish, and you go in here at the top, and if you're a scalper, it's 0.39, and I think multiplied by 50, that would be 15% if you do a 50x. Now, I don't advise you to do that, because scalping is actually one of the trickiest strategies to trade. You need a lot more signals than just the type of a candle, but just as a confirmation, it would be really handy. Then a candle that starts a downswing, we have it here. And then a candle that starts, let's see, candle that starts an upswing again, it's this one. We went up slightly, but then we go sideways. You see, when we go sideways, doesn't really matter what candles we get. I would advise you, after looking at 1 or 2 sideways like this, to mark them in your charts, and I personally, because I don't trade the 15 minutes anymore, I trade the 1 hour. I use the 15 minutes to get my signals on the 1 hour. I step away from the trades when I see 1, 2, 3, 4 candles on the 15-minute going like this sideways. I step away and I monitor other like the stochastic, other indicators, because in this sideways you can barely make any sense. Like this one will, no matter what techniques you use, we're on the 5-minute. This one starts an upswing. There's an outside candle following, so technically this upswing should continue, but it doesn't. It turns down on the next down candle. So when it's choppy like this, unless you go into finer time frames and do scalping on a very tight range like this one, but again, this is very, like, you'd have to go into the 1 minute to be trading that. So again, just to recap my point, on any chart, on any coin that you're trading right now, mark the support, mark the resistance, mark the upswings and the downswings that started the swings. And if you want to get really good at this, mark the 3 steps up. 1, 2, 3. The 1, 2, 3, 4, 5. And they don't have to be perfect Elliott waves, but you will see the more you mark them, the more you're able to correlate the levels. Any questions so far? I know I'm going at a fast pace, but I also know that I put out a handle and a handout, and I'm gonna put out another one. for the new bit that I want to teach you today. Today's bit is about pivots, swing pivot candlesticks. And swing pivots are, you see, in this swing up and swing down, there was this candle here right after the green one. And this candle here is the shape of a hammer, but it's a big red hammer. So here, yes, the influence of the upswing is still felt in the wick, but the where it closed is way below. So here's where the previous candle closed. Here is where this one closed. So it's a big difference compared to the previous one. And this is called a pivot candle. Now, spotting pivot candles is a finer TA skill than spotting up bars or down bars, because they are the point where the swing turns. So you need to be a little bit more sensitive to the nature of the candle. You need to check the size of it, and you need to check the color of it, and you need to check the shape of it. So there are three things that you need to keep in mind when spotting a pivot candle. Why is it good to be so careful and so attentive? If you're trading the 1 hour, you don't have to be so precise. But if you're trading on the 15 minutes, you need to be a little bit more precise. Even on the bigger time frames, when you are so precise, you can get a lot more profit because you're able to identify that resistance at the top or at the bottom. You're able to identify when the swing is going to turn and change direction. The pivots are not random. They happen at the point of resistance or at the point of support. And that's where you check to see how the price action meets the support and resistance. And you always see me now talking about levels because it's really tricky to trade right now. So I check the way the swings are at the support and resistance lines, and how the pivots meet them. Let me see what's happening here to see if I can give you a little bit of live action. Let me go into my XRP chart, because I had a super channel in XRP that I posted in the chat, and it's a channel that goes upwards, and I was looking at it going upwards, and I traded one swing up yesterday and today, and I just closed my long today. I'm really sorry. The internet in here is supposed to be really good, but apparently due to the war in Ukraine, there's a lot of monitoring of the networks and slowing down of the traffic at times. So my charts are loading slower than usual. Just give me a second. Where's my chart? This is the 4 hour. Okay, 1 hour. There it is. Perfect. So I'll show you how I traded this chart. So I went from I went in at this is the 1 hour. I traded, like I told you, I trade the 1 hour time frame, and I trade the patterns. So I traded the my entry point was 75.50, somewhere around here, because I was waiting for the confirmation of the RSI going upwards. There's been a lot of spillage lately, so I had the chart on the 4 hours. This line was super solid, nice 3 touches here, great, it held, but I wanted to see the RSI going upwards. So I went in at 73.5. There was the 1, 2, 3, 4, 5. I told Roy this morning, he was, because he knows that there's a drop coming, and I agree with him. I also have a long-term short that I plan on DCAing in. I have my DCAs ready, but until that, I knew that there was going to be a lift up. So 1, 2, 3, we're going to use this for support, and I had my stop loss here to secure profits, and 5. There we go. So once we got here, because levels are the trickiest ones to read, especially when the trend is so uncertain in this transition, I put my stop loss right here, above here, and then I went on with my day, because I don't enjoy watching each and every moment of the trade, especially on the 15 minutes if I'm watching for signals. But then when I'm watching is what it does when it hits my support and resistance line, which is the midline of this channel. So I saw the first candle get close to it, but didn't reach it. The second candle got to it. Now, when I saw this rejection here, I took my profit. When I see these double wicks here, I take my profit, because not only has it been rejected, so here, there. So this candle up here shows the initial rejection. I always wait for a double rejection, because in this case it wasn't that clear. It really held its ground there. But the second rejection, so the second time this got rejected, and you can see that on the 15-minute here. It started here and automatically got rejected here. So when I saw this wick again, I called it quits and I closed the trade, even though I had a target at 78.5, because that's a long-term support and resistance, a little bit higher, right above here. So and it came quite close to it, but you know, for 30 points, I wouldn't necessarily call it not meeting the target. It didn't meet it, but it, you know, in its own way. So now back to the 1 hour. I was watching the nature of the candles on the 1 hour, and this candle here, it's called a doji. A doji is a candle with two wicks, on both ends, obviously, because it's got 2 wicks and 2 ends. So a doji is a candle that looks like a hinge. So because of that's how I visualize it in my mind. And this doji is usually a pattern, a candle shape, sorry, for reversal. So I'm very mindful when I see wicks on both ends, because it means that one side is losing strength while the other one is gaining it. So here there was rejection from the buyers at the top. The buyers said, we're not willing to pay more than this. This is our top price. And the sellers were like, okay, if there are no more people buying from now on, we're gonna start selling. So this doji candle here meeting the resistance and getting rejected correlated with my knowledge of the swing. So 1, 2, 3, 4, 5 got me to think that I should close my trade. So from here to here, I made about 60% profit, 56. But it was a little bit more because I trade inverse perpetual, so made a little, and I DCA'd. So it was a good trade. 60% started yesterday, finished today. Really nice to make. And I was paying attention to the nature of this candle to show it to you in today's session. So pivot swings are of three types, three shapes. This is a doji. So a doji is a candle with two wicks, considerable wicks at the top and at the bottom. So not small ones, but serious ones. Like this is a doji too, but this is also a down candle. So this is an outside candle. This is a down candle. The down candle here, this doji here, marks reversal again. So if you don't trust this one, you'd better trust the next one. You've seen the three levels up. It's met your resistance. You have a down candle. What are you waiting for? How many signals do you need? And if you're wrong and it does decide to break up after a small correction, no problem. There'll be another trade. But if you're in 60% profit and you have three signals telling you we're changing direction, you take those signals. You believe them. So that was my 1, 2, 3, 4, 5, my trade today. And the doji here, this green one, was my first red flag that where we might be changing direction. The red one is also a doji. It's an outside candle and also a doji. The next one is also a doji. So all of them are like direction, change, reversal, 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 do something. That's one of the most common patterns for reversals at the top of the swing. This one here, the red one here, I'm just going to move the highlighter, it's so cool. The red one here is also a doji with the body and then the wicks signals reversal. This one, same, signals reversal. So reversal, reversal. The bulls started losing strength here. That's why the 5 on the swing is not very big, because they've lost a lot of strength here in 3. 1, 2, 3, 4. Usually 4 is more aggressive, but this one was very protracted. It was a lengthy one. I remember the whole morning watching for this retrace, and when I saw that the 55 on the 1 hour held and the 20 on the 1 hour held, I said happy days, were going up for one more swing. And even if the stochastic here bottomed out, the regular RSI didn't. So that told me there is another step up. And then here, when we did a higher high, we actually did a lower peak on the RSI, which is a bearish divergence between this peak, sorry, here, this peak here, and this one here. So between these two, they are going up. Peaks of the RSI are coming down. So again, I'm giving you a lot of my signals for exiting this trade, and I'm correlating them to the pattern of the candles. How I use the doji candles in this example to see that there will be a reversal soon. So this one was the red flag, and then the next one with a higher high and a bearish divergence told me, okay, do something about it, don't wait for it. And now I'm looking at it because it's an I already entered a trade here for the short, and I'm looking at the M formation. So this M formation, it looks really tasty for the down, because it's another 50 or 60% on the way down, 50% on the way down, which would be great for profit to make 100%. Probably around Thursday, because so for 4 days, because Wednesday is generally a bit sideways. Might do another push up, a small correction here, and then a lift up, but we'll see. I don't think so. Not in the way it's met this line, and not in the way it's making an M formation. Anyways, that's my that's my exit signals. Now, 3 types of reversal pivot candles, which is the new bit that I want to add to what I said last week. So Pivot candles are not random. There are three shapes. The first one is a doji. It looks like a hinge. Small body in the middle, or maybe sometimes a bigger body, but then super big wicks. Imagine the hinge on a door, or those wicks at the top and at the bottom being long. Let me show you a different type of doji. This one here is also a pivot candle. Like, it has a longish wick at the top, longer at the bottom, but it looks like there are forces clashing from both parts. This one is a clearer doji. Now, not all candles are ideal. Like, if you're trading forex, you're gonna see clearer candles. If you're trading crypto in a transition, as we are right now, they're gonna be really messy. Like, look at this sideways mess. Really hard to trade. You need to know where you are, and this is in a 1-2 on the way down. That was what this was. Let me take this out. So this is a doji. Long wick at the top, long wick at the bottom, small body in the middle, looks like a hinge. Forces from two sides are colliding, clashing in the middle. So that means that whatever has been leading the swing, either up or down, is losing strength, while the other party is gaining it. Their dojis are hard to spot because they don't have an exact formula, but they are there. You can train your eye to see them. And in a trend, in a bull trend or in a bear trend, they're really reliable. They always raise a red flag, like a little red flag if I'm in a trade and I'm mindful of exiting. Or the opposite. If I'm looking for an entry, I'm checking to see when the previous trade will end. But I need the context, and I need to know my steps up and down. Any questions? Not yet. Okay, so the first shape is the doji. Then we have two other shapes, and these are the hammer and the inverted hammer. So a hammer candle is, let me show you which is for reversal. This one, this is an inverted hammer. A hammer shows that the bulls are taking charge, whereas an inverted hammer shows that the bears are taking charge. So in order to find a hammer candle, I will be looking somewhere at the bottom of the swings. If I want to find an inverted hammer, I'll be looking at the top of the swings. I can see that the bears are mostly in control now because I can only see inverted ones. Let me go more towards this one. Okay, I found one. This is a hammer candle. And it's a candle that has a small body at the top and a long wick at the bottom, meaning that price started low and then it went up and it closed higher than where it started, and the main body is up, not down. So this is a hammer. These both are hammers. Both the red one and the green one are hammers. So this marks the start, the change of the swing, and it marks the start, the change from the downswing to the upswing. So even if it has a lower low and it is a down bar, this shows that the bears are losing strength. So this would be my first red flag. And again, because I have the channel, and I see that it's almost here. I wouldn't have the channel like that because it's early on. I have now the benefit of hindsight, but I would have it somewhere around here to have 1, 2, 3, 4 touch points. So here I would see that it came down to the support line, and then it held it, which means it went up, it bounced off it. So this shows the start of an upswing. Now this upswing is not a big one. It only went to the midline and a little bit above it, and then came down because it's still in the 1, 2. We need a longer 3. We need a longer 3. I think the 1, 2 is up high. Yes, sorry, I take it back. I need to see the full picture. So this is the 1, 2. Then we have the 3 down here. Then we have the 4 up here. Then we have the 5. Terrible. Look at this sideways. That's what we're trading now. I didn't take this trade. This was way too sideways for me. This was a great channel to trade, but it went on longer than expected. I remember it, and it had loads of very hard to read swings. Anyways, my point is the hammer, little body at the top, long wick at the bottom, rejection from support. If we're holding support above the line, it means that we're going up. So great to know that we're going up. The third shape is the inverted hammer, and the inverted hammer is at the top, and it's the other way around. So for an inverted hammer, I will go at the top there. Again, I have the support and resistance line, so I know what I'm going to be dealing with. And the hammer is like this. Where is it? Where is it? Well, I'm going to take, no, because this one is, perfect, this one. Okay. So not only the hammer is little body at the bottom, high wick, long wick at the top. So again, if we are looking for an entry point to trade the 1 hour, we'll be looking at the 15 minutes. So for the stochastic, we need to see if it topped out on the 15 minute. I'm pretty sure it did here. So this candle here would signal that momentum is changing in favor of the sellers, because the rejection is at the top. So basically buyers are saying, I'm not willing to spend that. If you're trying to spend more, sorry. If you're trying to read the swings, you have 1, 2, 3, 4, 5. So this inverted hammer would be a red flag, but you would still be looking to see how it's holding the MA, and if it's done, it's 1, 2, 3 steps up. Because for me, if I'm to look to enter a trade, this hammer, this inverted hammer, would signal that we're changing momentum, but I wouldn't go here. I would wait for it to hit the support or the resistance line. And this doji here, this hinge looking candle with a long wick at the top, longish wick at the bottom, tells me we're getting rejected again. So on this candle, I would go in. It's there's also a there's no divergence, but again, I think on the 15 minute this topped out. So the hammer and the inverted hammer show you when one side or the other is losing strength. The doji is showing you that there's a clash of forces. There's a clash. That means that the opposing side is putting up a fight. So again, it's a red flag. I wouldn't use it as an entry point, but I would use it as a red flag or a green flag, depending on the direction that you're going in. I'm always mindful of, oh, the red flag, closing the trade, taking the profit. But it can also be a green flag if you're looking for an entry. Or if you're looking for a change of direction because you've gone into a trade already. And for instance, if you had gone into a short here, let's say you see this doji and you're going, oh yeah, let's go in, because also the RSI, and I'll show you how versatile trading is, because there people don't sometimes forget where's the it's here. Okay. Very good. Super, super, super. Now I see. So on the 1 hour, we have one candle. On the 15-minute, we have four. So the first inverted hammer is this one here, but the RSI here didn't top out. So you would wait for, you don't have an inverted hammer here, but you have a doji here. You would wait for this doji, and this doji signals reversal. This RSI tops out, the stochastic tops out. Now this is a nice entry for a 15-minute trade. I clapped there in case you're wondering what is that noise. I clapped there. Like, yay, good entry. So this entry point would definitely bring you a couple of percentages, even if it's just to the midline. Even if you want to be super extra cautious, put, you'll be saying, okay, I'm gonna enter there and take 50%. It's still a 50% trade to the midline. So it's a nice entry. And even if you lose, let's say 10%, 1% on the entry because you're hesitating, you're waiting for that maybe 1, 2 for extra confirmation, you're still going to be making a nice profit. A 10x, I don't advise you use higher than 10x. 10x is great. It gives you a nice 10% variation in price before your liquidation. So it's a great one. So that's the pivots. Just to recap on the swing pivot candlesticks, they are not random. They show that there is a turn, that a turn is going to happen in the market because there is a change in momentum between supply and demand, between the buyers and sellers. What you need to pay attention to when it comes to a pivot candle is the shape, the size, and the color, depending on where it is, who's won. And the size as in how big is it? How big are the wicks? How big is the body? The three shapes, there's the doji, the one that looks like a hinge, body in the middle, wicks at the ends, showing the conflict, the two forces meeting. And then the hammer, body at the top, wick at the bottom, showing that we're going in for an upswing. And the opposite, the inverted hammer, swing at the top, body at the bottom. That shows that we're going to go towards the opposite direction, downwards, because we're getting rejected at the top. Just like the up bars and the down bars, you need to have your context. These are details to monitor the direction of a swing. You can use them as, let's say, double entry or exit signals, but they're not to be used individually as entry and exit points. Don't go into a trade because you see a doji or because you see a hammer. You need more confirmation than this. If it were that simple, everybody would be making thousands, tens of thousands, hundreds of thousands a month. It's not that simple. And it's not that simple now in this transition that we're in. You need to be very mindful. You need to have your risk management strategies in place. What else do I want to tell you? The final points are two keys in reading price action. The final 2 points. You need to look at how the pivot point is meeting the support and resistance. So if a pivot point has a long wick at the top, on the time frame that you are trading. So I'm trading the 1 hour. If my pivot point here met the resistance with a long wick, look at the wick on this, look at the wick on this, look at the wick on this, look at the wick on this. I have 4 wicks to tell me I'm meeting resistance and I'm getting rejected. It's likely that we're going to turn down. And we are making a beautiful M formation here. So this is the M. Once we go past the previous low, 75.94, chances are we're going to come down a little bit more strongly. The RSI on the hour needs to reset as well. Now, that's the first point to keep in mind. Look at how the swing pivot holds up a support or resistance. And the second one is, what's going to happen if it doesn't? So that's connected to something that I want to show you how to trade on Thursday, which is channels. What happens if we don't hold up resistance? What happens if we don't hold up support? Because again, these days I am trading based on levels and how those levels of support and resistance are met. And I find that to be the most profitable and also cautious / mindful risk reward strategy. So if I have my resistance, if this resistance doesn't hold, and if we're going above it and we're starting a trend, I need to make sure that my short is safe at the top line at the 82.86. So that's the second thing that you need to be careful about. You can trade only based on candlesticks and support and resistance. Absolutely. If you want to be hyper minimal in your trading strategy, you can trade using those only. But it takes months, maybe even years of practice to do so accurately. And you wouldn't go in high leverage, you'd go in small leverage. And make sure you watch it, because you need to watch every candle. So if you're on the 1 hour, you need to make sure you're watching every 15-minute candle in your intraday trading. So that's these are the 2 points. Where the first one is, how is it meeting it, and the second one, where is it going if it's not meeting it. In my case, if I'm shorting, I need to cover the top line. If I'm longing, I need to watch for, if I'm longing and this one held up, but imagine this one didn't hold up, I will be looking to put up my my target. I would normally, in this trade, I had take 50% at 78.5, and they then take 80%, 100%, close all my position at 82.5. Those were my initial targets, but I had to be adaptable with them, because when I saw these four, not less than that, 4 long wicks, 1, 2, 3, 4 long wicks, I said it's not worth it. If this doesn't hold up and it goes above it, I will probably DCA all the way. If I'm in at 77, I'll generally for XRP I DCA in 6 points. But here, when we get to this top line, I will put in, because it's less than 6 points, I'll put in again the amount that I have. So imagine I have 1,000 in. I'm going to put in another 1,000. And that will bring up my entry point halfway through. So on the retrace, I'm going to start being in profit in my short. That's my risk management strategy right now as I'm trading this channel, if I have to. On the way down, my DCA would be when it breaks and confirms the 20. So at the moment, it's holding the 20. If we close at the end of the hour below the 20, I'm going to put in some money. And then the 55, I'm going to put in some more money. So these are my 2 DCAs on the way down. So that's it from me. I'm going to put everything that I told you today in a handout, and I'm going to give you a task to identify the support and resistance, and then to identify the up bars, the down bars, and the pivot candles that show the change of the swing, the reversal of the swing. And if you do that for, let's say, 5 or 6 patterns on the 1 hour or the 15-minute or the 5-minute chart, whichever one you choose, you're going to see how trained your eye is going to be in spotting the changes in momentum, the changes in who's having the control, the buyers or the sellers, the bulls or the bears. It wasn't that long. I got it out in 1 hour and 15 minutes. Do you guys have any questions? Let me see who's in. Do you guys have any observations? Was I too fast? Do I need to repeat anything? Because I will do it. No. Okay. Then if you guys don't have any questions, I will see you Thursday. Thursday, it's going to be, again, TA day. So today we did reading price action. Reading price action is like the support and resistance is TA, but reading price action is on the spot price action reading skills. Super to have in your skill set. It's foundational. But on Thursday, I'll show you how I trade channels, on the 1 hour and what to be mindful of, because they can be great patterns to trade. They're my favorite pattern to trade and TA. They have their own quirks, just like any other pattern. But if you've seen enough of them, you'll be able to trade them. So I'll see you Thursday for trading channels. If you have any questions, let me know anytime. If you're posting your charts with the swing pivots, I'll give you feedback. And if you have questions on them, I'll answer them. Keep in mind that where we are at the moment, there's a constant struggle between the bears and the bulls, and you'll have a lot of sideways. But if you put, for instance, a channel on the 4 hour or on the 1 hour, or a support and resistance lines on the 1 hour and the 4 hour, you'll see the swings more clearly. You'll see the bigger moves more clearly. I'll see you Thursday. Have a beautiful evening.